Hi, everyone, and welcome back to Behind the Sold Sign podcast with your host, Justin, Sonia, and my colleague,
Sheila Kirkpatrick.
And today we're getting into the numbers comparing Q4 to Q1 and kind of reviewing the data and what that looks like heading into spring and what these numbers are revealing.
Yeah, and there's some interesting things.
Yes. Oh, absolutely. And you're going to discover that shortly. So a question for you, though. Based off of this data, what would be the first thing that immediately stands out to you?
I would say average sales price. Average sales price stands out so much because when we were looking at the end of Q4 for 2023, we were looking at an average sales price of
303,519.
Yeah, so 303,519. And then when you compare that to Q1, we're looking at $314,252. So you're looking at almost a $10,000 difference in pricing. Yeah. So we're seeing those numbers climb, and we haven't even hit the spring market yet.
Yeah, and you made a valid point that I think we need to repeat right here, right now, is the average sale price for Q1, like you said, $314,252. Yeah. But when you compare it to the month of March alone, so the average price for the month of March was $326,937. So that's pretty evident that majority of the sales are happening in March. And it was a little bit of a slower peak coming into January, February, where now, I mean, the sale price was still going up, but now it's really going up.
Yeah. So what we're looking at is we were in that seasonal low. We're at the end of Q4 in 2023. It's your seasonal low. And then we start to see, that bell curve. And here we are. We're hitting up that curve now. We have those people that, they're waiting until spring, and prices are continuing to climb, which we know that that's going to happen. But did we know that they were going to go from an average $10,000 over the course of the quarter? And now we're in March, and we're actually looking at about $23,000 more to buy the average sales price now versus the end of the year. And we talked about this in previous podcasts, and we were saying, don't wait to buy. We're in the seasonal low. Take advantage of the seasonal low, because again, we'll talk about interest rates, I'm sure, further as we get along here, because that's always a topic of discussion. But with interest rates, we still haven't seen the drop in those yet.
Yeah. No.
Which again, that affects the market as well.
Yeah, absolutely.
Yeah.
And then looking at the months of inventory when we're reviewing Q4, which was 3.2. And then if you're comparing that to just the month of March, we're at 2.6.
Which, for those that don't know what months of inventory is it would be taking the amount of houses that you have today, and if there was no other inventory to sell, and we were to sell that until it was gone. So months of inventory has actually gone down. Mm-hmm. So we didn't have a lot of listings then in December.
Right.
And we were at 3.2, and now we're at 2.6. So those numbers have gone down, which again will drive that pricing up.
Yeah. Yes.
And then our list to sales price is pretty steady. We're looking at 103%.
Yeah.
And that's pretty much the same as what it is. But the other thing that we're seeing, which is going down, which will drive prices up, is the median days on market. Cumulatively, for Q1, it's 26 days on market, which is less than it was at the end of Q4. But now for the month of March, you're seeing that down to 22 days.
Yeah. Yeah. So that demand is increasing. Inventory it's not setting us straight. We're not getting enough inventory coming on the market to balance it out. It is still a seller's market. And if that demand increases going into these spring, summer months, it's only going to, like you just said,
increase that price.
Keep driving it up.
Yeah. And then what I found interesting was, and I'm just going to read the topic.
Yeah, no, this is interesting.
And it's CREA. So CREA stands for the Canadian Real Estate Association, and that's where we get all our statistical data. They hold, they're the gatekeepers of real estate. But CREA forecasts rebound in residential property sales. So CREA forecasts rebound in residential property sales. Well, what does that really mean? When you look at that, you're going rebound, like that just doesn't make sense. We have been having this great real estate market, but what we don't realize is that not every province in the country has had the same success
as us.
Right. There were dips across provinces last year. There's 10 provinces, and we seen dips in how many?
7.
Yeah. So 7 of the 10 provinces, we were not one of them.
We were not. We have had a steady increase, and it's projected going into Q2, Q3, Q4 to continue to increase even into 2025.
Yeah. So one of the numbers that I thought was interesting was the average sales price of houses across Canada. Again, you can Google this information and you'll get a different number every time. So let's just put that out there. But this is for single family residential property. And across Canada, you're looking at approximately $667,000 for the average sales price of a house in Canada. And we were at, for the province of New Brunswick, so not St. John, because we already know the St. John number, but for the province of New Brunswick, we were at
the second lowest. The second most affordable.
Second most affordable.
First most affordable was Newfoundland. So we are right after Newfoundland for most affordable, even considering how much our pricing has increased over the last few years. We're still second most affordable.
Which is probably one of the reasons that we didn't have a decline. Because if you look at the provinces that had a decline, or that didn't have a decline, let's put it that way, there was 4. Alberta was at a 0.8, New Brunswick, Nova Scotia, and Newfoundland. So we had 4 that didn't have a decline. The 7th is that we're taking into account the entire country.
Right. Yes.
Right. Yeah. So we've had 6 provinces with a decline. Overall, the country was a negative 3.6, and New Brunswick was actually increased at 2.7%. And we know, based on our stats for the end of the year, that the St. John market was actually around 4% of an increase in pricing. Yep. So what's interesting is that when you see this pricing for the entire province, the entire pricing was just shy of $300,000, so very much in a line with where we're at.
Yep.
But then you look at the numbers and where are we expected to climb?
The forecast is for 2024, they're expecting a 5% increase, so bringing it from $297,544 to $312,566.
Wow. And so then that much more
just for 2024.
Right.
And then going into 2025, expecting another 5.3% increase.
Wow.
Bringing the price to $329,030.
So what we're looking at, again, when you take the end of Q4 and what was taking place there, we're just over 300,000. And now we're looking at almost 330,000. So about $26,000 increase in that average.
In that short period of time.
That's crazy.
So it does really put it into perspective, because a lot of people, like we've said, they're waiting for, the rates to drop so they can get in there. However, the data is telling us prices are not dropping. And if those rates drop, what is that doing? It's increasing the buyer demand, which in return is driving the home prices up even more.
That's the scary part, is that we don't know where things will go. How will the rates affect things? Because right now they're not affecting us the way that they affected other places across the country. So when that happens, is there going to be that many more, or is there going to be that many more people that can't afford to buy?
And that's a scary thought too. It's like, housing is becoming less and less affordable.
It really is. Yeah. Whether you're renting or buying.
Yeah.
It's something that is, we are in a housing crisis. It's, we see that each and every day. So it's obviously something that we're passionate about on all aspects, but it's concerning.
It is concerning. Yeah.
When we talk about these interest rates, and we've talked about interest rates previously, but we're not seeing any major changes.
No.
Like when you think about even the prime rates
7.20.
Okay. So we're looking at 7.2%. We've been holding there since I think
July of 2023.
Yeah. So we've been holding there, that's our peak. That's the peak that we've been for prime in a while, like in a lot of years.
Yep.
And it's projected to go down later this year.
Yeah, they have another announcement on June 5th. So it will be really interesting to see. And like we said, if it does go down, great. However, that's more people coming to the table and more competition.
That's right. And then when you look at the interest rates and where they're at right now, if you can get a rate for under 5%, that's great.
Yep.
The 5% rates, maybe let's just say in a best case scenario, the rates come down. Let's just say it comes down to, I don't know, 4.5 even.
Yeah.
Let's just use that number. If it comes down to 4.5, you are never going to recoup the costs of the differential in the new asking prices of the homes.
Price. Yeah.
So
you are better off buying it at a lower purchase price with a higher interest rate and then refinancing it later on and getting that lower rate once you've already gotten the best purchase price.
Absolutely.
Yeah.
For those that are out there, don't wait. We're just seeing whether it's information that we see on a day-to-day basis, whether it's the Canadian Real Estate Association's information, it is continuing to project to be higher and higher, not only now, but later this year and also in 2025. And that's the statistical data. We don't have anything beyond 2025, so we can't give you anything further than that.
Yeah. And if you're looking at mortgage rates right now, let's say for a 5-year, you're looking at 4.94% if you're with a broker, for example.
Yeah.
And then if you're going with the bank, you're looking at a 6.84%. So even there's...
Yeah, and just keep in mind that the bank rates are typically posted rates and that you should always be able to negotiate better than that, which is also a great website, WOA, and it will tell you different rates daily. It'll update various times throughout the day. So it's WOWA.ca.
Yep.
And you can check out rates there all the time. I use rates to negotiate when I am looking for my best rate as well. So that is another little tip and trick that you can use to maybe get a better rate on your renewal and things coming up.
Absolutely. So yeah, super interesting there too.
Yeah, so that's a lot of information.
It's a lot of information. And again, it's just really interesting because we always kind of have our perspective from working in the industry daily and what we see when we're out there showing homes, writing the offers, what the competition is like. But then taking this data and being like, okay, where were we 3 years ago? And we thought, oh no, this is getting out of control. Now, where are we today? And where is the data telling us we're going?
Yeah.
So it's like, we're not peaking off and stopping. We're actually continuing to incline.
Yeah, we are continuing to climb.
Yeah.
Just like those damn interest rates were.
Yeah. So no, like you got to get a house now rather than later if you really want to get that best price.
Yeah.
So, yeah.
So, I think, is that a wrap?
That's a wrap, I think.
All right. So, well, thanks for joining in on Behind the Sold Sign with Justin and Sheila. And like, subscribe, share our content. If you have any topics that you want us to talk about, we've been kind of behind the scenes doing a lot of different things. So we've been getting some questions about our podcast, actually.
I know. They're like, are you guys coming back?
Yeah.
Is this over?
So we have been doing a lot of, we started Rapid Real Estate, which is 1 minute real estate facts. So we've started that. And we've also been doing community videos. Mm-hmm. So these videos, we're actually just starting to roll those out this week.
Yes, we are. Our first one's coming soon.
Yeah.
So yeah, if you guys have any questions or if you're looking to potentially sell this spring or summer or buy,
Yep.
let us know. We would love to equip you with the knowledge so you can make an informed decision and set yourself up for success.
Yeah. All right.
Well, thanks for tuning in. Until next time.
See you later.
See ya.